morning and welcome back. Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Thanks for being with me. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Glad you're both here. Don, before we get to your Nike trade, tell me a little bit about your thoughts on the market right now.
Well, we're still actually caught in the grips of what I'm terming NVIDIA fever. I mean, this marketplace is completely reliant now on NVIDIA. You look at other, what I term monsters of technology like Apple, they're basically flat on a year-to-date basis. Look, I think we have to be on NVIDIA watch 2024. If it starts to come off, it is going to be an extraordinarily rough ride for the entire S&P 500. It has become the most dangerous stock in the S&P 500.
So at this point now, so NVIDIA fever, we'll step away from that. It's been hitting highs and such. You're looking at Nike today. Now this one you have a bearish thought in mind. Tell us a little bit about Nike.
I do. So I'm going to leave some of the technicals, obviously, to Ben. But in terms of the technicals, obviously, it's in a degree of a downtrend, which he'll probably show you here momentarily. But another aspect of Nike that, you know, outside of the trade I'm about to build, I find a little bothersome. I almost feel in most respects, a lot of people are getting priced out of this marketplace. I mean, these are sneakers, these are shoes that are going for well over $100, $150 a pair. There is actually great competition now in this particular space. There's great alternatives. I'm actually wearing On right now, which is a Swiss-made company. Nevertheless, bearish position inside of Nike. So I'm going to go out and I'm going to jump out to the April 19th options expiration. And this is going to be a bearish put spread. So I'm going to buy the 100 puts, again, buy the 100 puts, sell the 95 puts. Now it's a $5 wide put spread. The trade is done for about $1.30 debit. Now I use a slightly out of the money put spread with some duration on it in the event where I'm looking for a decent size move, which is exactly what I'm applying here on Nike. Another leg, if you would, to the downside.
Okay, and we are leaving these technicals. We're checking this out here. Ben Lichtenstein with the charts.
Yeah, I'm on board with this, Nicole. There's definitely some weakness playing out here and kind of teetering around a key area right around this 104 level. Further weakness could open up the door to some continued price decay. We'll get into that when we're talking about the longer-term charts in just a minute. But let's begin with the rally we saw into the close on Monday and then the sell-off we saw yesterday in reaction to CPI and how we've really just been kind of consolidating since. So we're talking about 2 areas of value on this chart. Your eyes should be drawn to the period where we kind of consolidate first around 106.80, you get that high conviction breakdown, and then again, as we've been currently balancing around this 105.20 level, below that pivot right now, not necessarily faring very well for the bulls here at this point. A very short-term look at some of the recent price activity. Again, 107.50 down to, we'll call it 104. Now let's take a look here. And here you should see a very similar pattern playing out, right? Areas of value that are forming at lower and lower levels, high conviction trade to the downside, but just sort of identifying this is the move that we just looked at, right? Just kind of coming off 107 to 104. So just a blip on this chart here as we go back to the middle of December. The stock was trading up around 125. Let's identify some of the areas of consolidation where we've just paused. Again, we've got an hourly bar chart here, candles 122, 108. And again, as I mentioned, this is where that significance with 104 comes into play. Take this out here. We open up a door for a retest of the lower extreme that we've seen over the last couple weeks here and throughout the month of February. But longer-term chart, a daily candle chart. Now, we're going all the way back to the summer of 2021 here, Nicole. You could see a bit of a double top in your top left corner there. And then you can see, again, on this daily candle chart, areas of consolidation that continue to form at lower and lower levels. We're balancing around 104. Take that out. You're opening up a door for a retest of those lows that we saw last fall, September, October, and even the lows that we saw back in the fall of 2022. This is a stock that's trending lower, pretty easily identifiable here in this instance. And again, I can understand the bearishness here.
Okay, so at least he understands where you're coming from, Don. Any final thoughts there?
I'm going to leave this one alone because Ben and I are rarely on the exact same page over here, but I'm going to take that one and let it go. I think it's a nice bearish opportunity, though, inside of Nike.
As Walmart eyes the Vizio acquisition, we do see Walmart down a little over 0.5% today. Your thoughts on Walmart's chart, I guess, and trades,
All right,
Don.
So in terms of Walmart, let's start with the fact that a month ago was actually bullish in here and jumped on trend. I'm going to do the exact opposite right now. So Walmart has recently had a run from the $150 mark to 170. And again, this is not like, the latest greatest tech stock. Yeah, they're doing an acquisition of a significantly smaller company, which is Vizio, but nevertheless, this is, again, kind of contrarian play. So I am going to bear up at this particular point in time, and I'm well aware that their earnings are coming up. I'm also well aware that there's actually a 3-for-1 split that's due out in the next couple of weeks. Nevertheless, I think it's a great opportunity, but you have to have a little bit of foresight here. Look, you're stepping in front of a freight train to the upside. However, we're doing it with defined risk, and that's one of the things that an option spread can allow you to do, right? So I want to get ahead of the curve over here. I want to bear up a little bit. This one is also going to be out to the April 19th expiration. As I said a few moments ago in the Nike trade, I like to give myself some duration when I'm taking a very strategic directional bias, which is exactly what we're doing here. I'm actually buying the 165 puts, selling the 160 puts. This one's done for a $1.35 debit. So it's almost identical to the Nike trade, right? I'm going out buying a put spread, but in this case, heavy contrarian position in ultimately Walmart shares, which have effectively been straight up. Any change of tone though in here would be a nice, appreciation, if you will, for this particular put spread.
Okay, so similar to the Nike thoughts and charts. Let's talk about this, Ben. Your thoughts?
Well, Don, it's pretty clear we don't often agree, right? Especially when he's going counter trend. I like to position a bit more with it, and in this instance, it's to the upside. There's no indication that we've invalidated that working assumption, and until we take out key areas, again, I have to give the benefit of the doubt to the bulls here across multiple time frames, just beginning first and foremost with a 30-minute candle chart and the rally that we've seen. This stock was trading, as you can see, just a couple weeks ago down around 160 all the way up to 171. Areas of consolidation that have formed at higher and higher levels. No rejection of this upper level balance that's currently forming. Again, we've got a range that's been established around 169. You've got a well-defined upper extreme, 171, and a well-defined lower extreme, we'll call it 167, which coincides with a key area structure that was established on the way up. Exactly what the bulls want to see. Next thing they're looking for is a breakout above 171 and then a new area balance to form at a higher level, right? Taking a step away from this 30-minute candle chart, let's add a little time on here. We've got daily candles now, so we've actually added quite a bit of time on here. We're going all the way back to middle of March last year. High conviction, bottom left to top right. No indication, again, as I've mentioned, that we've seen any rejection of this very well-defined trend to the upside here. Let me just find where this is. It must be, here we go. Now, as you can see, along the way up, we've kind of found consolidation areas at every $10 interval. So I figured, well, why not? Wouldn't we just go ahead and balance and establish a range around 170? So we could see some consolidation here, but still no indication that this bull pattern's been invalidated as of yet. Another step back shows, look at this, we're going back to weekly candle charts here. Again, I'm just adding more and more time onto this a working assumption that we're in a trend environment to the upside all the way back to 2017. Nicole, you can see currently attempting to break out of this range. 161, as I mentioned, could easily form a new area balance. This is upper level 170. That's what the bulls are looking for. The bears don't want to see us get back below 161, open up a door for a retest of the lower extreme of that range that we just broke out of, and possibly even 138. So again, at this point, no real indication that bears are not still fully in charge here, in my opinion.
Right, right. What we're seeing from JP Morgan, they're saying neutral, 176 target. Deutsche Bank says buy. They have a 190 target. Don, your thoughts?
Yeah, let's not just look at the technicals for a second. So we moved from 150 to 170, but what economically is pointing towards a stock like Walmart exploding to the upside like this? We're back to the Fed, which is higher for longer right now. The economy, where are we at? And possibly a little inflationary pressure coming back in here. Again, I think you want to be ahead of the curve in this one, and I do want to take that short position. It's ever the contrarian position, and that's again, the way that we trade here is, again, define risk, take the other side of the marketplace, especially in explosive moves like we've seen inside of Walmart.
All right, and next up, Tesla, which everybody has been out on a bit of late. I mean, 1 month down 15%. It certainly has been getting hit. 6 months down 20%. It's well off the $300 that it was. And you actually are feeling a little bullish on this one. Tell me a little bit about this.
All right, a couple things in this particular fund. Yeah, absolutely going to take a bullish, and this is going to be a call ratio backspread on Tesla. So before I even get into why the bullish call over here, I want to explain just a minute amount of the trade. This is a trade that is definitely bullish, and it's going to be wildly bullish. But if we're dead wrong, we can still produce degrees of profitability, which I'll explain here in a moment. Now, that being said, yeah, Tesla, year-to-date basis, it's not pretty. The stock's down about 25%. In large part, though, I think this has a lot to do with the AI, what I term craze, and moreover, like NVIDIA fever. You mentioned AI, you mentioned NVIDIA. I mean, we have a firm, BMR, that just partnered with NVIDIA that's up, ridiculous percentages in shortest amount of time. Once that actually wears off. Once we start to see maybe a little bit of the NVIDIA craze kind of die down, I think we're going to see a rotation back into areas like, for instance, Tesla, even Apple. I mean, Apple is basically flat on a year-to-date basis. Tesla's down 25%. There's no love in what has been.
As you mentioned, NVIDIA, yeah, I'm sorry, I thought you were finished there. I want folks to know we're going to be talking NVIDIA in our next segment. Ben, your thoughts?
Yeah, this one, unfortunately, we're not going to come to agreement on Tesla either here, because I think that we're coming under pressure, and I think we just took out a key level. I'll show you that on the daily time frame. Let's just begin with a 5-minute candle chart. Some of the selling we're seeing with the broader market weakness. Tesla's come under pressure here. You can see shares just this week from 195 down to 181. No rejection of that, right? We're just consolidating, accepting this new lower level. Again, this is a 5-minute candle chart, so we don't want to put too much credit into this, but it does speak to the two phases of development that we look for. High conviction on the left side of your screen, again, as we're seeing lower lows, lower highs, and then we go into this very much wide range kind of consolidation phase, overlapping rotational, very random horizontal type development. So right now balancing around 185, kind of teetering around that level. Let's add a little time onto this chart. Going back to when the stock was trading up around 270, 250, 260 area. We're talking back in the end of December, beginning of January, and you've got another easily identifiable, well-defined trend to the downside here. Let's take a look. 60-minute candles here we're looking at, and 4 areas where the market paused and kind of regained composure, currently teetering around this 185 level. But it looks to me like as long as we're below 214, bears are still in control. I think with the last one with Walmart, I said that the bears were in control there, but there's definitely a bull trend in Walmart as well. But bears in control in Tesla. Let's step one more time back. I want to show you what's going on the daily time frame. And this is why I think this is key. You're going to see that Tesla actually was trending higher. We were seeing areas of value for them at higher and higher levels since the beginning of last year. 118, 180. There's that move you mentioned, Nicole, up to 300. But since we had gone sideways, balancing around 240, and while we were doing that, what are we going to be referencing? 180. The bulls did not want to see us take out 180 in continuation of this series of lower highs here off that 300 level. Look what's happening. We're taking out 180 right now. So a key area right here, got to side with the bears on this one, considering the series of lower highs we've seen and the other 2 shorter time frames we're seeing weakness and bearish type pattern playing out here. 180 is a big level. Let's watch that this week.
Yeah, so we'll watch for that. And also it's worth noting that, with their facilities that they have in Mexico, they've actually been bringing in some Chinese suppliers to work with them in Mexico and build some parts there. I thought that was an interesting tidbit. But your final thought, Don Kaufman, your final thought.
Yeah, with the backspread actually that I've got planned in here. Look, if the bearish move continues to play out, we'll still have a very small credit. But the move to the upside needs to be absolutely explosive above like 220 level, and we're back in a very profitable trade. Again, it's selling the 185 calls one time, buying 2 of the 200 calls. Trades done for $1.30 credit. So in that backspread, there's definitely risk, but there's explosive upside potential in the event that Tesla rebounds. If it does fall flat on its face, we still get to keep the $1.30 credit. It's a nice position for what is a wild child inside of those monsters of tech.
All right. Thank you both. Great to see you for the big three today. Don Kaufman of Theo Trade and our own Ben Lichtenstein. We did a great job. Nike, Walmart, Tesla today.